This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another new edition of Bazaar Morning Call. It's a Tuesday morning. We're coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. A brand new day. But did any of you check out the new Apple launch yesterday?
I did.
The Apple Vision Pro.
I did.
I appreciate it. I think really good technology, but what a price.
It's better if somebody gifts you, right, Nigel? $3,500. And but it's Apple is premium, right? I mean, I checked out what is the competition out there in the market. Yeah, that's the thing. I mean, you wear it around like goggles, basically, and it's the difference between this product and what is out there in the market is that this is a mix of virtual reality, which is fully immersive. I mean, those products are there. I mean, gamers use it all the time, and augmented reality, which means that you actually can place things which don't exist on top of the real world. I mean, your real environment around you. So, I mean, this gives the opportunity to switch between VR and AR, just in case your real reality is not.
I was just thinking, you guys, I mean, we already spend, 10 hours looking at a screen, right? Whether it's your laptop or your phone. And now, if that was not enough, you just take another screen and sort of plaster it on your face. Where are we headed?
The thing is that this is eventually, this is just not a prototype, but they just showcase this, right? And the launch is only early next year. This is expected to replace those 10 hours which you spend on everything else, right? So one device, and you can do your work, and you can sort of, do meetings, and you can watch content, and you can game, everything basically.
But the problem I feel with Apple is that overly expensive products in a very, very niche segment. So from a stock market perspective, I mean, of course, Apple's stock is at all-time highs. It's at all-time highs. But, just thinking about the future. I don't know.
I would just say that I appreciate the technology. Very good. Great product. Premium product, as you said, Prashant, as well. Just sit out of this one, right? For sure. I mean, $3,500 or even if someone had to gift it to me, I would give them an alternate. Don't do this, do that for me.
Get you a bike, Nigel. I mean, I think it'll be.
I didn't want to go down that road, but since you said it,
a bit cheap. I don't know. I mean, I don't know how much.
Yeah,
it'll be.
You get an Interceptor in India, 3.5 lakhs. Yeah.
All right. Well, that's the AR/VR mix which Apple has come out with. It's the first product launched, by the way, for the company in the last 7 years. We'll get to that more in detail a little later on the show, but let's quickly tell you what you need to know as we begin another trading session. So markets here in India, it's repeat and rinse. You are seeing a push higher, most definitely, but you're also seeing some profit taking at higher levels. The way I want to put it is that the markets continue to tease us with higher levels, but not quite there. I said this yesterday also, some hesitation, no conclusive break above the 18,500, 18,600 kind of levels. So we're not quite there with that final push higher. On the upside, the level, of course, is the all-time high at 18,887, which is not very far away. You need just 1 or 2 good days. U.S. market, I'll come back to levels which you need to watch on the Nifty and Bank Nifty in just a bit. But U.S. market session was more consolidation. I mean, not very much, very quiet day. The S&P was down a little bit. The NASDAQ was flat. The Russell 2000, which on Friday went up 3%, was down about 1 1/3%. So it did not build on Friday's gains, but maybe it was just the kind of day we had last, overnight. And there is more to go here for the Russell. Russell rallying would mean the rally in the US is broadening out into more economy-facing stocks, small caps, mid caps, everything, and not just the large 6 or 7 mega caps out there, tech mega caps out there, which has led the move so far. We had data, the US ISM services data, which was dovish, which was weaker than expected. But the key is the CPI data, which is next week, and we'll get that before the Fed decision, and I think that'll be more important. So in a way, the US market last night, overnight, more of a holding pattern kind of price action. For the Nifty, just a couple of levels. The swing low of 18,464 is the sort of nearest kind of level I can put out. That's the important level on the downside, which must be defended. Then you've got 18,420, but 18,464 is the first one, which must not break if there is further selling pressure, which comes through we're closer to 18,600 as of yesterday's close. The bank nifty is neither here nor there. I mean, just look at the last 3 or 4 days. It's neither breaking out nor breaking down. So again, a little confusing kind of price action. Again, on the bank nifty, the swing low of 43,706 is the one to be, which should be defended on the way down. And you can also kind of, if you're trading, use that as stops. Breaking above the recent high, which is not happening. I mean, we've been putting out this level for the last few days of 44,499 will perhaps bring more upsides. I think the SGX is indicative of not a very large start, a flattish kind of sideways start, 22 points lower. I mean, if you get a bit of a deeper kind of a cut right at the word go, maybe that gives you an opportunity. But again, like yesterday's close, like the kind of price action we've been seeing, this open, if you get this 20-point downtick, it's neither here nor there. Watch for these levels on both the upside and the downside for better entry opportunities.
No, absolutely. And, you know, this all-time high has been elusive for the market, right? Yeah. Evading the market for a while now. We saw it for the last 2-3 days where the Nifty has been failing to hold on to that 18,600 mark. It's been coming off from those levels. I think the intraday high that we saw last week, which was 18,662, that continues to be, you know, a bit of a ceiling for the market in the near term and something that the market is struggling to sort of take out. So let's see how it goes. The Midcap index is really where all the action is. Yesterday, we saw some heavy buying in a lot of spaces in the Midcap index, whether it's the defense sector, a lot of the auto ancillary companies. IT has come back, especially in the Midcap space. There was a lot of delivery-based buying in defense names as well. So, you know, all the action is in the broader markets. Now, one thing I noticed is that FIIs have turned sellers. It's been 3 days now, but FIIs have sold in cash for the last 3 days. Yesterday as well, they sold about 700 crores. All the domestic institutions bought a large chunk, about 1,200 crores or so. So this seems to be the template of the market. On the upside, this 18,660 level is a bit of a ceiling, and the floor continues to be around 18,200, 300. The big event upon us is, of course, the RBI policy, but I don't expect too much of a market movement from there. On 8th June is when you'll get the final data. There's a pause expected, as we've been alerting you in the last couple of days. So RBI may not move the needle as far as rates are concerned. But all in all, you'd have to say the mid-cap index, the stocks beneath the surface, are where all the real action is.
Well, that's right. You know, Sonia, in FY24 so far, the mid-cap and the small-cap indices have done much better in comparison to the Nifty. We're talking about a 5-6% return on the Nifty itself. That's from March 31st. But just take a look at the mid-cap and small-cap indices. They have done a big outperformance. I'll tell you what, it could be a good time to look at your portfolio. I'm not talking about stocks that are just part of the mid and the small-cap indices. You're looking at individual stocks, they're up 50, 60, 70%. Some of them, well, that could be very good reason, but I think a lot of those companies, a few of them loss-making companies as well, that have seen a big increase. So it's a good time to look through your portfolio, say, hey, I've enjoyed this ride, but maybe I want to get out of this one because fundamentals, may not be justifying the kind of move that we're seeing on some of these stocks. So just a word of caution, clean up some part of your portfolio and hold on to stocks that you believe in. Now, in terms of trade setup, today, in fact, you have the Nifty Financial Services Index that will play out expiry. The Nifty continues to remain in this range of around 200, 220 points approximately. The shorts, well, they are being missed in the system. I'll tell you why, because the FIs, well, they haven't really been putting in money in the last 3 sessions. So in June, they're yet to buy anything. And there are no shorts in the system, so that's preventing us from moving higher. Otherwise, if you had some shorts in the system and the markets are not going anywhere, some of those shorts would be forced to cover out, which could give us a bit of a fillip. Now, in the last couple of sessions, the FI net sell numbers around 700 crores. You don't want that trend to move towards around 1,000 crores, or maybe they're taking a bit of a break after the kind of inflows you've seen in the previous 45 days or so. What did the FIs do in the F&O market on index futures? Well, they added some long positions. The long-short ratio is at around 50% apiece. You would like that short positioning actually to go up, which will give us some bit of reason to move higher in case, things stabilize. On the option side, you're not getting any, direction with regard to the buying of options because they're buying puts as well as calls. But it's good to see that they're writing more puts than calls. And yesterday, the 18,600 put, that was the most active strike. It added more than 30 lakh shares. The premium yesterday was around 50 to around 60 rupees odd. On an average, it was close to around 70 rupees. So for those writers, they're looking at that 18,500 and 30 odd level holding out. So that becomes your first stop loss. And otherwise, you go a little bit deeper at around 18,475 odd. So that's a crucial support zone. But the Nifty Financial Services Index, that plays out expiry. And for the day itself, going by the options data, The 19,375 on the downside, that should get protected. And on the upside, 19,550. Remember, last expiry, that was last Tuesday, we saw it break out of that range and you had a good expiry actually. So today, on the upside, you're looking at 19,550. The 19,400 put actually has seen a fair bit of writing, so you're expecting the lower levels to hold out. SGX Nifty is indicating a 20-point downtick. I'll tell you what, if you get a 60, 70-point downtick, maybe you'll want to take a bit of a punt, maybe buy into the index, but watch out on the downside for 18,475 odd.
All right, well, 20 points perhaps doesn't do it. Maybe a little more is needed. We'll get back to market levels and market discussion in a more detailed way a little later. But let's get you quickly started with what you should expect in the first half hour of the day. Abhilash Narayan of Standard Chartered Bank will join in for some global trade setup in terms of how Stancy is looking at things. Our research team brings you CNBC-TV18's list of top 10 stocks for the day at 8:30 this morning. We'll speak with Siddharth Khemka of Motilal Oswal Financial Services for his take on stocks and what he likes.
All right, well, let's begin the day now with some views coming through. First up from Gautam Dugard of Motilal Oswal. He says that with healthy macros, range-bound oil prices, a robust fiscal balance sheet and moderating inflation, the outlook for the market looks optimistic. In contrast to the market consensus of 5% growth and Motilal's forecast of 5.3% growth, India's real GDP growth surprised with a 6.1% print in Q4. They maintain an overweight stance on financials, capex, autos and consumption, while they are neutral on IT and healthcare and underweight on metals, energy and utilities. In terms of stocks, Motilal's top large-cap ideas include ICICI Bank, ITC, L&T, M&M, HCL Tech, Ultratech and ONGC. In the mid and small caps, they like Ashok Leyland, Vedant Fashion, Metro Brands, M&M Finance, APL Apollo, Godrej Properties and Lemon Tree.
Okay, well, on the rupee, here are some views coming in. Kunal Sodani of Shinhan Bank says that the US dollar trims gains following release of ISM Services PMI, which was weak. Hawkish comments from ECB officials boosted euro against the backdrop of a sluggish US economy. He added, it's important to keep an eye on USD yuan move, and for the rupee, 82.4 to a dollar acts as a support, while 82.75 to the dollar is a resistance.
All right, and on the bonds, Ajay Magnolia of JM Financial says with the moderation in inflation due to continuous rate hikes, there has been consensus for a pause in policy rates by the Fed, though some probability of hikes still exists. On the domestic front, we have the RBI policy announcement on June 8th, and the market expects the central bank may continue to pause. The 10-year yields are expected to hover around sub 7%. Liquidity position has also improved over the last week, which is supporting the money market. SDL auctions are a bit higher than the indicated amount, and the cutoffs are expected at current levels. He expects the 10-year benchmark yield to trade in a range of 6.97 to 7.02%.
Well, we have a lot of stock-specific actions to track for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. We'll look at MTAR Tech, Eicher Motors, Godrej Consumer, Delivery, JK Cement, Capacite Infra, Veranda in Learning Solutions, BL Kashyap, as well as Nelco. Their stocks on the back of positive news flow. While you have IEX, they came up with their update, and the stock could react to a negative set of numbers.
All right, well, Abhilash Narayan is now joining us, Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, good to have you with us here. Thank you very much for your time. How's the market looking now, Abhilash, after the rally that we've had? Do you think we will get that push higher to all-time highs here in India on the indices? And will it continue, going up? Will this move be uninterrupted, as some are saying, all the way to about 20,000, which is about 6-7% from where we are?
I think if you look at the Indian markets and global markets in general, we've seen a big rally in equities. And this is something we've been highlighting in the beginning of May, that there's a possibility of a melt up in equities. And we've seen that happen. Now, from our perspective, we think that the rally is starting to look stretched. So if you look at some of the momentum indicators, if you look at some of the proprietary indicators that we've developed, equity markets are starting to look stretched. So there is a possibility that we do see a consolidation, not only in Indian markets, but also global equities. And in fact, we think that, if you look at US equities, we think that markets are starting to look toppish. That's close to a bull market right now, from lows we've seen last year. And given the soft economic backdrop, we think that that's a bit too much. So we've actually turned underweight on US equities just last Friday.
Okay, that's interesting. So last Friday, you turned underweight on US equities. Do you feel the same about the Indian markets as well, that perhaps they've topped out in the near term? Because in the last 3 or 4 days, the market has been sort of struggling to get to those all-time highs for whatever reason. How are you feeling now?
Well, we think that there is more upside to Indian equities over the next 6 to 12 months. So we think that Indian equities should definitely outperform global equities going ahead. And the underlying drivers are well known. We think that earnings growth will remain robust. So we are looking at over 15% earnings growth for FY24. Valuations, while not cheap from an absolute perspective, have eased over the past 6 months or so. So that's supportive. And, while we have seen FII outflows over the last 3 days, if we zoom out a bit, since the start of this quarter, we have seen substantial inflows from foreign investors. And part of that is rotation out of China into other emerging markets, including India. So we think that the FII inflows could continue over the next 2 or 3 months at least, and that could be a tailwind for Indian equities. So yes, around 18,600 for Nifty, there could be a bit of resistance. We could see a bit of consolidation, but we should eventually break higher above that.
All right. Hi, Abhilash. Good morning. Abhilash, the big Q in the coming week will be from the central bank here in India, the RBI. What's your expectation out there? We are working with a pause. And also from the Fed, do you believe that they have one more rate hike in store, looking at the data that's come out, or do you think they'll pause as well?
Well, for the RBI, we have the view that RBI will remain on pause. So obviously, if you look at the CPI data that came out, a few weeks back, we saw CPI dip to 4.7%, but we think most of that was due to, the base effects. So maybe in a couple of months, we should see CPI go back above 5%, given that some of those base effects will fade. So we think that RBI will remain on hold at least till later part of the year. As far as the Fed is concerned, we are of the view that the Fed will remain on pause. So obviously markets have priced in an expectation of maybe one more rate hike by July. But if you look at the latest services PMI data that came out overnight, that was relatively weak. It's important to remember that services sector is over 70% of US economy, and that is flirting with contraction. In fact, if you zoom into the services PMI data, the employment sub-index actually went into contractionary territory. So obviously we need to watch out for the CPI data next week, but we think that the softness in services sector will mean that the Fed remains on pause in the upcoming meeting next week.
So this upside to Indian equities that you're looking at in the next 12 to 18 months, and you're talking about a 15% earnings growth, correct? Where do you see the earnings pickup come through from? Which are the pockets, which are the sectors that you like now?
So we think that some of the more pro-cyclical sectors are the ones that we think have more upside. So if you look at banking sector, we think that that's in a great shape. The balance sheets are quite strong. NPL ratios are quite low. And we think that the strong loan growth that we have been seeing will mean that the banking sector continues to deliver healthy returns. The other sector that we like is industrial sector at an aggregate level. So obviously in the budget that was announced a few months back, we saw a lot of policy announcements come through, and we think that most of the infrastructure spending is going to be of good quality, which will be supportive for the economy in the long run. So the infrastructure and industrial sector could see actually earnings growth in excess of 30% if we look at the overall sector.
All right, we'll leave it at that. Thanks a lot, Abhilash, for joining in, and have a great year, have a great day, and of course we'll chat with you again very soon. That's the word coming in from Standard Chartered. They are underweight on US equities, but they still like Indian equities with a long-term perspective. Thank God for the bulls here. 12 to 18 months is the time horizon that they're looking at, and they like the pro-cyclical sectors. Let's slip into a quick break. Our entire team will be joining in just a while to help us with the top 10 list of stocks.
CNG is good, but to get something, you have to give up something. OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
डायबिटीज कंट्रोल करने के लिए आपने इतने स्टेप्स उठाए।
नो थैंक्स।
तो हमने भी आपके लिए एक कदम बढ़ाया। बजाज अलियांज लाइफ इंश्योरेंस प्रेजेंट्स डायबिटिक टर्म प्लान, इंडियाज ओनली टर्म प्लान एक्सक्लूसिवली डिजाइन फॉर डायबिटिक्स। ये प्लान आपको हेल्दी लाइफस्टाइल अपनाने पर रिन्यूअल प्रीमियम्स पे रिडक्शन देता है। समझो हो गया।
Well, so much has happened in the last 24 hours. The Wall Street rally took a breather. Apple has launched a brand new AR/VR product. And for our own markets as well, foreign investors have been selling for the last couple of days, and that explains our markets hitting a bit of a top in the last few days. Well, our research team is standing by with CNBC TV18's list of top 10 stocks for the day to help you prep. Vivek is joining in first up. He's tracking two stocks, IEX and MTAR. Vivek, over to you.
Well, good morning. IEX has come out with its operational update for the month of May. Slightly muted update. So overall volumes, while it's gone up almost 8% on a year-on-year basis, prices have fallen almost 30% on the exchange. Now, what the company is saying is that the prices have fallen on back of improved supply side scenario, which has led to improved liquidity. Further, as far as the outlook is concerned, what they're saying is that the supply side liquidity is continued to do better. Number one, enhanced coal supply, something that is aiding the liquidity, reduction in e-auction coal prices, as well as consistently declining imported coal and gas prices. All of this has led to improved liquidity. So they expect prices at this point of time to continue to remain quite subdued. MTAR, yesterday saw a large block deal take place. So 3 promoter entities have paired over 3.5% stake. One large buyer, Plutus Wealth Management, has picked up almost 13.1 lakh shares in the company, and this will turn at around 1880 rupees a share.
Okay, all right. Thanks a lot for that, Vivek. But Sonia, Eicher Motors, there was some takeaways that they met some analysts, is it?
Yes, they met a few analysts in the last couple of days, and the takeaways are very positive. So I just wanted to put that on board. Remember, auto stocks have also been gaining a lot of ground, and the management commentary is quite bullish across both commercial vehicle and the Royal Enfield business. They say they continue to see traction in the CV segment, and in the next 2 to 3 years, the double-digit growth is something that can continue in the commercial vehicle segment. They also expect an increase in market share across all segments, both Royal Enfield and the commercial vehicle space. And for Royal Enfield particularly, they see huge traction in the rural markets, which is important considering that, the urban market was picking up in the premium segment, but now they're saying the rural areas will also see an improvement for the Royal Enfield franchise. They are gradually ramping up production to meet the rising demand, and the development of the electric vehicle two-wheeler is on track. The first launch is expected in FY26, so we've got to wait some more time for that. But remember, the stock is moving in tandem with the BSE Auto Index, so it's up about 14%, while the BSE Auto Index is up almost about 12-13% this year. So it hasn't outperformed the auto segment as such, but it is still, gained a lot of traction in the last few days. So I'm going with green over there.
Okay, all right. So now, thanks for that. Let's hop across to Mangalam. He's joining in to tell us about Godrej Consumer and Delivery. Morning, Mangalam.
Morning. So Godrej Consumer, they've strengthened their leadership team. In fact, they've gotten Asif Malbari as the CFO for the company with effect from August 10th. Remember, he is currently the CFO of Tata Passenger Electric Mobility, and he's also a director at Tata Motors. Under his watch, the Tata Motors India business actually, grew 5 times itself. Samir Shah, who's the current CFO of GCPL, moves on to the group role as someone who would lead consumer investments for them. But remember, Asif Malbari before that was at HUL as well, so has over 23 years of experience in this space, and perhaps he would have been working with Sudhir Sitapati in HUL itself, so they would have some chemistry there as well. See Godrej Consumer in the green as their leadership team strengthens. For delivery, just keep an eye out on the comments that the company made in their analyst day, where they've reiterated the long-term growth prospects with their competitive moats, but they've outlined targets for the express parcel business to generate EBITDA margins, adjusted EBITDA margins in teens. And if you notice, over the last 4 quarters, the margins of the company have been improving, the losses have been reducing. And as we've been pointing out, all these new age companies are talking more of the middle of income statement and bottom line as against the top line right now. So as a result of which, brokerages are happy. Morgan Stanley says that this targeted EBITDA margin for the company would mean return on capital employed to the tune of almost 30%, as a result of which they have an overweight rating target at 415 rupees per share.
All right, Mangalam, thanks a lot for that. Well, I'm tracking JK Cement. A small acquisition is what they've gone ahead and done. Toshali Cements Private Limited. We know that the promoter entity has been looking at exiting the cement business over the last few years. And now they've done a deal with JK Cement. JK Cement, they bought 2 units, both in Odisha. One is an integrated unit that's backed by clinker, and there's also an additional grinding facility that they're looking at. So the combined grinding facility will be close to around 0.7 million tons odd. The transaction, well, there are certain conditions that need to be taken care of, but they are saying that maybe in the next 6 months or so, we'll see this deal getting completed. The total cost is only around 157 crores odd. So you equate that on a per ton basis, it works out to around $30 per ton. Why is it positive? Both these plants are operational. You're getting it at around $30 per ton. And also this acquisition gives them an entry into the East India market. So all in all, it should be read positively. Surbhi joins in though to tell us about some more stocks that are on the news. Surbhi?
So I'm watching out for Capacity Infra. They have a board meeting scheduled on 8th of June to consider fundraise via preference route. Veranda Learning, where the wholly owned subsidiary Veranda Race has partnered with Talent Academy and Publications to augment its reach in Kerala. They've further teamed up with a placement orientation company Fire, which offers expert training for recruitment in private banking and BFSI sector. BL Kashyap, the company has won an order worth 147 crores. The execution timeline for this order is 27 months, and as on date, the total order book is close to 27 odd crores. And lastly, Nelco is also on my radar. The company has acquired 9% stake in Piscis Networks for an initial investment of 99.99 lakhs, and they plan to increase stake in this company to at least 30% in the near future.
Thanks a lot for that. Let's do a quick recap in case you missed out on any of the stocks with positive news flow. There's MTAR Tech, Eicher Motors, Godrej Consumer, Delivery, JK Cement, Capacity Infra, Veranda's Learning Solutions, BL Kashyap and Sons and Nelco, while IEX is the only stock on the radar with negative news flow. Let's slip into a quick break. On the other side of the break, we have so many stocks to discuss. Siddharth Khemka of Motilal Oswal Financial Services will be joining in, and we'll also connect with Vimal Kejriwal of KEC International to talk about their business outlook as well as how the Kavach system can help bring more safety in railways after that unfortunate Odisha train tragedy. Stay tuned.
A road trip in a CNG car.
Where will all the luggage go?
OMG! It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं, जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
Welcome back. We wrapped up the top 10 stocks that you need to watch out for. But now let's get back to the macros. The Fed's policy decision is the next big cue for the market. The expectation is that the Fed may pause this time around, although another rate move could come in the next policy. Let's listen into some commentary coming in from the Allianz Chief Economic Advisor Mohammad El-Erian and former Fed Reserve Vice Chairman Roger Ferguson ahead of the crucial FOMC meet next week.
The Fed is going to skip, meaning that it's not going to raise rates here, but it will be inclined to do so again in July, that it resume hiking. That, I think, some Fed officials believe gives them optionality, gives them a month more of data, and then they can decide. I don't think that is the right approach. I think that's the muddled middle. I think the time has come to either go after your 2% target for inflation and therefore hike again, or acknowledge internally that 2% is the wrong target and therefore pause. What they are likely to do, according to what they guided and according to what the market believes now, is going to end up being the muddled middle.
Look, I've said that they've got 1 or 2 more moves to go. I think Friday certainly reinforces that there's underlying strength in the economy. There were a few elements there that were a little weaker than expected. So I think, you know, the overall story, though, is really unchanged. The question is there a pause this time? If there's a pause, that is not the prelude to the end. It is simply a chance to take stock. Tick up in the unemployment rate, I wouldn't put too much weight on that, but that could lead to the willingness to take a little bit of a pause.
Okay, well, so that's basically the global opinion which seems to be coming through. Let's talk about IPO that we want to put a spotlight on. This is EKO Lighting, which is, coming to the market. Surabhi is here to tell us more about the company. Surabhi, hi, morning.
Hi, morning Prashant. So EKO Lighting issue opens today. They are looking to raise somewhere around 600 crores, out of which 350 crores is the fresh issue and the remaining is the offer for sale. The price band for the same is 270 rupees to 285 rupees per share, and according to which the implied market cap will come up at 2,200 odd crore rupees. Now they're going to use 50 crores of the fresh issue to repay some of their debt and also 200 odd crores to invest in the subsidiary, which will set up a new facility in Uttar Pradesh. Now a little bit about the company. EKO Lighting is an ODM, which is original design manufacturer player providing LED lighting solutions. Now the company's products are categorized in LED lighting, refrigeration lights and ABS pipes, but currently most of their revenue comes from the LED lighting segment, almost over 90% of their revenue currently. They have 4 manufacturing facilities and the largest customer for them is Signify Innovations, which is formerly known as Philips. As of March 2022, they have an order book of 86 crores. In the 9 months FY23 period, they had done a revenue of 241 crores with a gross profit margin of 35%, an EBITDA margin of 21%, and a PAT of 35 crores. Now moving on to the valuations, it's valued at 50 times FY23 PE, and when you compare it to some of the recently listed EMS players, it's right up there. So Syrma is currently valued at 57 times FY23 PE, Avalon Tech is valued at 49 times, and Keynes Technology is valued at 86 times. So it's not cheap, but it's not expensive either, because Keynes is valuing it somewhat around 86 times FY23 PE.
Okay, thanks a lot for that. Very helpful there. Let's get Siddharth Kemkar, the head retail research at Motilal Oswal Financial Services. He joins us now to give us his views on all that's been happening in the market so far. Siddharth, hi, good morning. I wanted your thoughts first up on the defense sector, because yesterday, actually in the last couple of days, buying has once again resumed in a lot of the defense names, and the delivery-based buying has also picked up, so large chunks coming in. Is there still more scope here despite the rally that we've seen? And if yes, which are the stocks that you like?
Yeah, very good morning, Sonia. So I think defense is a multi-year, or you can say a decadal kind of opportunity, at least for the Indian markets. We have seen that after a very long time, the opportunity has really opened up not only for the government-owned defense PSUs, but also for a lot of private players. So, while the ramp up in the defense ordering has been pretty sharp, the order execution delivery has also happened, and the government has taken indigenization at a very serious note. The list continues to keep growing every time the government comes up with an additional list. The offset clause, which was initially set up to help the Indian defense companies, is now being followed up by a list which goes on, or the government keeps adding to the list. So I think, yes, definitely from a short-term perspective, after the sharp run-up, maybe one would need to look at the valuations for some of these stocks. We saw last year some of the shipbuilding companies giving phenomenal returns from their low levels. So example, Mazagon, which was again up yesterday. But as I said, yes, short-term valuations need to be taken care of. The fundamentals need to be needs to be seen. But there seems to be a very good long-term growth opportunity in the Indian defense space. Unfortunately, we don't have a lot of coverage right now in the defense space, but some of the private players that we cover, so for example, L&T, which is doing a lot of activity in the defense. Bharat Forge has done a lot of activity in the defense space. They have got orders from the Indian defense. They have also got orders from the US to provide guns, which is a big step for them. And some of the auto players are providing some of the defense orders.
Hi, Siddharth. Good morning. Siddharth, we're heading into monsoon, and hopefully it's a good one. For the good of the nation, for the good of the economy, and just for good of all of us. It's so hot. Sid, I believe that you all have come out with a few stocks that you all believe could be the monsoon/rural consumption theme. Could you run us through a few of those names? A couple of pipe makers, agricultural plays as well?
Yeah. Very good morning, Nigel. I think, yes, the monsoon has a bit delayed, but nonetheless, I think this year IMD has forecasted that monsoon would be normal. So 96% of long period average, which is pretty good, considering that this year could be impacted by El Nino. And we are seeing some delay. So monsoon is yet to arrive at Kerala. We will see some. We have already started seeing some pre-monsoon showers. There is an expectation of a cyclonic rain pressure in Maharashtra as well in the coming days. But overall, I think the onset of monsoon should be good for agriculture and very important for the rural sector, where we are seeing the demand is yet to pick up. So sectors which are linked to rural, for example, agrochemicals, fertilizers, rural consumption stocks, that should do well. So what we have done is we want to play, for the next few months to play this theme, we've created a basket of monsoon stocks. So first is Phenolics Pipes, which is mainly into the agricultural pipes. We believe that companies should benefit with the agri sector doing well. M&M Finance is the second stock in that basket, where we believe the company is doing well with the tractors, financing doing well. Coromandel, Bata India, and Tata Consumer are the other three stocks in the basket.
Okay, all right. I want your thoughts on KEC International, if you track that one, Siddharth. I'll give you some time to mull over it because we have the management joining in as well. Now, after news of the tragic Coromandel Express train crash that happened in Odisha, there's heavy focus on Kavach systems, which is, of course, the need of the hour, as we understand. To know whether there is renewed discussion on supply and what the opportunity looks like, we're joined by Vimal Kejriwal, the MD and CEO at KEC International. Mr. Kejriwal, good morning and thanks a lot for joining in. Of course, it's very unfortunate that we need to talk about this, but in any case, it is the need of the hour, the Kavach systems. And I understand that you have secured maiden orders in this train collision avoidance systems, which is TCAS, under the Kavach program in FY23. Can you tell us what could the monetary opportunity be for a company like yours? And in terms of a timeline as well, what are we looking at in terms of execution?
Sonia, we have got 2 orders on the TCAS system. Roughly the overall value is around 600 crores. With the partners, our share is less than half of that, because that's an OEM which manufactures the entire system and we install the system. So the opportunity is very large, but we have not seen too many tenders or orders coming out of it. And I think now with all the sound and fury about Kavach, I do expect that some more orders will get released. There is capacity if the orders are released.
So this 600 crores that you mentioned, any kind of timeline that you're looking at in terms of execution, and what does this mean for your order book, especially for FY24?
Right now, it is not significant portion. I think it's less than 200 crores as far as our order book is concerned. We have 31,000 crore order book, so it's very insignificant today. But I think, as I said, that if a large number of orders are now released based on what's happening and what is the discussion all around, then I think that can push the order book. I think the second piece here is that what we have seen in the last 2 years is that entire ordering, tendering, etc. was shifted to the divisional railways. And a large part of the divisional railways, I think efforts are also going into the tendering. They're not used to this. And I think my suggestion would be that, the tendering moves back to the railway board and to RVNLs and other people so that the divisions can focus on operations maintenance. And because that's their job. So their job is not tendering. The tendering are specialist people. So if that goes back there, maybe we can see a lot more speeding up of the tendering and the ordering.
Mr. Kejriwal, hi, good morning. 2 things. One, this is the value that you spoke of, 600 crores, and your share is less than 50% of it. Is for Kavach, right?
Yeah, it's for Kavach, yes.
Okay, and the OEM is Siemens, which makes it?
No, we have a tie-up for these orders with Kernex.
Okay, with Kernex. Got that. Now, is there any, when this was kind of laid out, this program was laid out, was there a sense of how, if this had to be installed on trains sort of across the country, the entire railways, what would be, is there a way to estimate what the potential could be? The size of the market could be?
Honestly, I don't have an idea, but the numbers which are touted around was that the system is installed on less than, I think, 5% or 7% of the locos. And there are around 20,000 odd locos, etc. So the size could be very large. Ultimately, capacity would become a constraint. See, I think a couple of years back, the Indian government decided that we want this to be done indigenously. So when you talked about Siemens, etc., I think they have their technology, but over a period of time, I think it was more localization. So we have 3 or 4 local vendors. A couple of more are under development and under approval with RDSO. So if all of them come through, I think capacity from the locals also will not be an issue.
All right, Mr. Kejriwal, so we'll have to wait for further clarity then on that front. But the other trigger has been your Brazilian operations. Just wanted to focus on that. You indicated it's turning around, which is good. And in the first half of the year as well, margins will look up. I think you had a debt of close to around $50 million out there in the Brazilian operations, SAE?
Yeah, absolutely. I think it's roughly around 50 million, yeah.
50 million. And you were looking at refinancing that. I believe that you were borrowing in high teens. And you were looking at refinancing that in the first half of this year. Have you managed to do that?
So I don't have the exact figure, but definitely we have refinanced between 25 to 30 million out of that.
All right. So more than 50% of that. That has been refinanced from the high teens to low teens. Could you give us the difference?
It was not even high teens. Some of the interest rates were between 20, about 20 also. Okay.
Oh.
So I think the average cost has now come down to around 14% or so.
Okay, 14%. Can you tell us what does this mean for your overall debt on the books of the company? What is it now? And any plans to pare it down further?
So Sonia, it does not impact the debt of the company because we have just refinanced it and replaced the high cost by a lower cost debt. It will definitely have a positive impact on the interest cost, which was 3.1% last year, and we have been targeting to take it down to 2.5%. But Brazil was an important component of the increase in interest, so that should be a favorable number for us.
Okay. Can you also give us a status or check on the Afghan collections? The total exposure that you have there is about 600 crores. How much have you received so far?
So out of 600, the net exposure is around 250 odd because we have to pay also some of the creditors, etc., which are against back-to-back payments. We have received around slightly less than 50 crores. We also have an agreement signed for another close to 150 crores. So that should come in any day. So we would have got roughly around 200 crores. And we are in a dialogue with the other financiers, that's World Bank and ADB, to get the balance amount.
Okay. All right. Final question, Mr. Kejriwal, before we let you go. What kind of a growth number are you looking at for this year? Margins, should they hover at around 6-7% for the first half and recover towards the high single digits in the second half? If you could tell us that.
So Nigel, our guidance has been that first half should be around 6%, second half around 8%. So overall for the year, around 7% is what we have been talking about. With an order book of 31,000 and odd and 4,000 L1, we have said that we should be growing at 15% plus this year.
All right. We got that. And I think you guided for a 100 basis point increase in margins in the first half of this year, and which moves up a little bit more in the second half as the year progresses. Thanks very much, Mr. Kejriwal. It's always a pleasure and good speaking with you. Well, we'll take a quick break here. We're back. Anuj is with us for a quick setup as he sees things. We are just 15 minutes away from the pre-open session as well. Our technical experts come up as well with specific calls. Stay with us.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
चीज डोसा मसाला डोसा पेपर सादा डोसा रोटी बटर नान कुलचा वेज कढ़ाई वेज कोला स्टीम राइस जीरा राइस फ्राइड राइस
भैया और कोई ऑप्शन?
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको नहीं तो
कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने। नहीं
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
All right, welcome back. You're with us here on Bazaar Morning Call. We've got just 15 minutes to go, a little less than that, for the pre-open session. SGX is indicative of a flat kind of start. It's actually picked up a little bit more on the downside. At 8 o'clock, it was indicating a 20-point downtick, which is 40 now. Anuj is here with how he's seeing things. Anuj, hi, morning.
Morning, Prashant. Well, you know, both Nifty and Bank Nifty in some kind of a supply zone. Yesterday, they slipped right from the first resistance level. But it's not shown any signs of weakness yet. There's been supply at higher levels, but it's getting absorbed at lower levels as well. Though the FI selling is picking up, that's something that you want to keep an eye on.
And more importantly, keep an eye on the HDFC twins. Very quietly, both have fallen about 8% from the 52-week highs. Yes, there was some dividend angle, but even adjusted for that, there's been quite a bit of correction. The other thing to track is Reliance, which has been at around its 200-day moving average. Yesterday, there was a bit of a mini breakout. That's something that I'll keep an eye on. Of course, this is an important week. The RBI MPC starts today. The policy comes out on Thursday, and it's going to be a very important policy to watch out for. Financial Nifty expiry today, so that may impact Bank Nifty a bit. Just one more point. If you look at the 52-week high and low data, that sometimes gives you very interesting insight into where the market is. 3 months back, when the market bottomed out, this number was almost reverse. Now, the number of 52-week high stocks are 244. And within that, A group and B group are dominating. Now, when the number starts to reach 500 to 600 is when you get a bit cautious in the market. That's when the market normally tops out, like it bottoms out when it reaches somewhere around 500 to 600. As of now, there's, of course, been some euphoria, but not really peaking out indicators. I think that's still some time away. My sense is that the broader market perhaps still has some more room to go. Advanced decline has been quite okay. So I think things are quite okay for the market. It's just that at higher levels, so close to all-time high, there's always going to be some resistance.
And Anuj, what about the Apple's new product, the mixed reality Vision Pro?
I'll have to say...
It's 3 lakh rupees, by the way.
I'll have to say one thing. There's the world on the one side, Apple on one side. And I think it's the greatest company in the world. And it just, keeps churning out new product after product. And I know in the past, expensive products. I know in the past I've said that it's more to do with your ego than anything else. But over the last 6 months or so, I've sort of changed my view a bit. It's just phenomenal. And the one good thing about great companies is that they don't sit on their laurels. They just keep innovating, and I think that's what Apple does. Every time you think what can be new, they come out with something new. I'll tell you one more thing. Apple's market cap, for example, is now higher than entire UK's market cap, right? And if Apple had to list its products like AirPods, iPad separately, individually those companies would be bigger than any of the Indian listed companies. It just tells you the kind of strength that this company has. Phenomenal, just phenomenal.
Anuj, you and I have discussed Apple versus Android, and it makes me happy that
you've
switched over
to our side. Perhaps maybe in a few months you'll see Anuj wearing that Vision Pro.
I'm going to give it a chance, Anuj. I was in the camp as well that appreciates the products. I love it. But will you give it a go whenever it's available?
I think I will. I think I will. I mean, why not? And
are you really going to spend 3 lakh rupees on that headset?
If something is good, then you have to pay the price. You have to pay. You have to pay for good things.
Good things cost money.
Good things cost money. And एक कहते हैं हिंदी में कहावत है महंगा रोए एक बार सस्ता रोए बार बार. It's like that. You buy an expensive product once and you're settled.
I take your point. When the Apple iPhone, when it was, we used to have the discussion many years ago as to it's for 1 lakh. Oh my God, why would you spend so much? But now every other person on the street who can afford it goes in for it. So I guess there'll come a time where perhaps all of us will be sitting with that Vision
I think that time is a little far for me. Phone is fine.
All right. Anuj, thanks a lot for joining in. Well, for the market, we have been facing a little bit of a hurdle around that 18,600 mark. So let's get Sudarshan Sukhani into the conversation. We have Shrikant Chauhan as well. Sudarshan, morning. How are you feeling about the market now? Do you think there's any trigger that can take the market out of this range?
Good morning, Sonia. Obviously, the market decides on the triggers, so we can't say what the trigger would be. But the Nifty is almost just 60-70 points away from breaking out from that resistance of 18,650. It's easier to break out and move up 60 points than it would be to move down 150 points. So the trade is still to be on the long side of the market. There are two ways in which the trade can be executed. First, if there's an intraday dip of about 100 points approximately, buy the dip. Keep a stop under 18,450. Second, if there is no dip and then the market starts crossing that barrier of 18,650, then go long and keep a 100-point stop. So today there are two possible trades, and it is also likely that the market may neither break out nor go down 100 points, in which case we don't trade.
Okay, Shrikant Chauhan is also with us. Shrikant, good morning. What's your view at Kotak Securities? Are you guys advising buying on dips or buying at these levels, or are you a bit cautious now?
Yeah, good morning, Surya. I think, the market trend is very clearly indicating us that it is heading higher But the thing is that in the short term, based on the option positions, 18,600, 670 is acting as major resistance for the market. And I think it will cross this particular level only with a gap of opening. Till then, we are going to see some range-bound sort of activity. And today, in case, on the back of this Fin Nifty's expiry, if we see any weakness in the market, then close to 18,540, 18,500, we should be buyer because we are expecting eventually the market to move higher. Broadly, buy on dips should be the strategy, and we should look for adding those stocks which are very close to their important support level. So, based on the overall positioning of the stocks, so we need to create our positions.
All right. What about individual stocks? Let's get to that then. Shrikant, what are you looking at this morning?
Yeah, I think today IT stocks should do well because most of them have fallen to their crucial levels and they are not reaching their important supports. In fact, Infosys, which was down some few days back, is now again reversing back from the lower levels. 1290, 1300 is acting as very good support for it. I'm expecting stock to move towards 1350, 1360 sort of levels. 1290 should be the stop loss for adding any long positions. And other stock which we like is PVR Inox, which is currently around some 1420, 1430. Here it is forming some base building formation and it is reversing after hitting crucial levels. I think the stock has completed its correction on long-term charts and now again the stock is now going to move higher. So from here we can easily expect 1500 on the higher side. We can keep stop loss somewhere close to 1380 for the same.
And so that.
All right, Sudarshan, what about you? Individual stocks that you are looking at?
Well, Grasim is a buying opportunity. It's a stock we don't talk about much, but it's now building a small base and breaking out. So buy with a stop under 1700. Ashok Leyland had a sharp dip. It's now recovering from that sharp dip. So it's a buying opportunity. It's in an uptrend anyway. Buy with a stop under 146. BPCL broke out of a trading range on the downside yesterday, and there was that news that justified that breakdown. So perhaps there is more downside here. It's an intraday short, only intraday, with a stop above 362. And finally, PI Industries is a buy. The stock has been having a very decent rally. It moved sideways for 3-4 days. Perhaps that should break on the upside. So buy with a stop under 3485.
All right. Thanks a lot, gentlemen, for that. Let's slip into a quick break on that note. On the other side of the break, we'll have lots more coming through, the pre-opening rates kicking in. We will also have Nava. The stock will be on our radar. It's had a great run. GRK Prasad of Nava will talk about their Zambian subsidiary, which discharged all the overdue loan installments. Stay tuned for that.